Hi, everyone. Welcome to Analyze Your Trade, episode number 15 for December 12th, 2017. Tonight, we will be discussing your trade ideas. Over the last few days, we had over 50 people submit up to 5 symbols each to talk about tonight. And on your screen right now, while I'm talking, you should be seeing the list for tonight. So my name is David Kosmeter. I'm the creator of Timing Research. I developed this show with Dean of Follow Me Trades, but he's off this week as moderator, and I have Matt Buckley here to moderate. I'm going to go ahead and turn the show over to him.
Thanks, David. Welcome aboard, folks. Let's go ahead and get airborne. We have a lot to cover. Instead of a 3-panel tonight, we got 4 up jets, and we're gonna do some good work here and deliver you guys some serious justice. Working with a lot of folks I'm very familiar with. Mike Filighera over there. Actually, we got 2 left coasters here. Lance Ippolito, my partner there, John Thomas, and Steve Place. I haven't seen you in a while, buddy. It's good to be working with you again. I'll tell you what, Mike, Lance, John, Steve, in that order. That's how we'll take stuff tonight. Unless you guys want to turn it into a dogfight at certain points, feel free to jump in if you're seeing a shot of opportunity. So, Mike, why don't you give us a quick, 30-second to 1-minute executive summary about your background at Logical Signals and how you got to where you are.
Good evening. I'm Michael Filighera. I am located in San Francisco. I have been trading since 1979, and I started as an options market maker on the Pacific Exchange. Cisco, I've traded here, I've traded in London, I've traded in Amsterdam, and I've traded on the DTB, and then came back here. Currently, I don't go down to the floor anymore, but I do continue to trade in. I'm switching around Logical Signals, and I'm going to be using it more as a coaching site, and also using my trade room to do live coaching with, and that's my 30-second spot.
I appreciate that. So the gentleman yields his time back to me. That's awesome. Lance, tell us about your background, my friend, and what you're doing over at Alpha Shark, one of the sharks over there.
Yes, one of the sharks at Alpha Shark. I'm on for about 2 hours a day. We have a live trading room, mostly analyzing institutional order flow in the options market. I also trade some earnings, and my background is actually a CTA, trading futures, but I really don't trade that many futures anymore. I stick mostly with the equity options, and I personally became obsessed with insider activity. So I've kind of, I guess going forward, just to wrap it up, I've really analyzed, I see thousands of orders a day in the options market, and I've narrowed all these companies, maybe it's about 50 or so companies with insider activity in the options market. And I've just become obsessed, keeping Excel sheets, keeping up with their trades, finding what hedge funds are behind them. And that's what I kind of do now. I have a list of stocks on my watch list that whenever I see big order flow hit, I trade them. And besides that, I'll nibble day trade or swing trade equity options, either earnings or the Momo names. But my main focus is on the unusual order flow and the insiders.
So, Lance, we probably have a lot of folks that are maybe not familiar with equity options. Just give us a quick minute on what are you talking about when you say order flow, and how can you potentially trade that?
So, some of the biggest moving stocks this year have been names that probably people haven't heard of: Weight Watchers, Match.com, Boyd Gaming. Right? You're probably thinking, Lance, what the hell are you looking at trading these stocks? You're not talking about Tesla or Apple or Facebook. Well, these stocks don't trade A, a lot of volume, or B, a lot of equity options. So you're looking at a name like Match.com. Maybe it trades 300 options a day. When a player comes in, or a fund or an insider comes in and buys a block of 5,000, February 25 calls, let's say for $2, and they're initiating all that premium on a trade, the chances are that A, they know the stock's going to go up. Maybe there's news on the stock. Maybe it's a good earnings report. Maybe there's some kind of major news coming out. So what I do is I see those orders via a scanner I have that tracks these options, and I filter it so I could filter the stocks that I like. And when that unusual volume comes in, and then as soon as I see that, I either piggyback on the trade they did or put a trade on that fits my risk. For my personal portfolio. So that's what I do. It's if you check my Twitter or website or just message me, you'll see kind of the detail of I'm basically the fifth wheel of a fund out there that knows inside information. And
there you go.
Because I don't have to dress up and go to work every day.
Apparently not. Thought we were catching you after hours. All right, let's move on to my buddy John Thomas. John, I'm actually enjoying a little sip of Camus with one of the last bottles from our last event, but the world famous Mad Hedge Fund Trader. John, tell us about your background. You got to keep it under an hour, man. I know you've been around the world, but tell us what you do and over at Mad Hedge Fund Trader.
I've been in the business 50 years as a trader. We're global long short macro. I trade stocks, bonds, commodities, precious metals, energy, and real estate, both on the long and the short side. We publish a daily audited trading performance. As of now, we're up 60% in 2017. That's 60%. And we have a lot of happy customers right now.
Very great returns. Very happy folks I know over at the Mad Hedge Fund Trader, and I run John's Mad Options Trader service. Steve, how about you, my friend? Haven't seen you in a while. I hope everything's well. Give us a quick brief.
Hi, everyone. My name is Stephen Place. I am the founder and head trader at Investing with Options. Our goal is to teach our clients how to earn aggressive and sustainable wealth in the options market. Our focus is mainly on the premium selling side. So we use NDI trades, butterflies, condors, calendars, and we also do directional income with credit spreads and an occasional call and put buy here or there. That's all I've got right now. I'm really excited to be on the call, and thanks for having me.
You bet, Steve. Good to see you again. Folks, my name's Matthew Buckley. You guys can call me Whiz. Flew the Hornet for about 15 years from the Navy, graduated from the Navy Fighter Weapons School, which many of you know is Top Gun, and can't wait for Top Gun 2 to come out and get asked even more cheesier questions. I taught myself how to trade equity options when I was on active duty, applied kind of everything I was learning flying a fighter aircraft, having a discipline, contingency planning, knowing when to get out of a bad situation before it got worse, knowing when to run away bravely with limited losses. And it worked really well to options trading. I popped up on the radar of one of the largest vol arb firms in the world, went to the board of trade in Chicago, was a managing director of strategy, and then the founder and CEO of the Options News Network, kind of the CNBC for options for a couple of years there. Had a blast, decided Chicago winters suck, and decided to move down here to beautiful Boca Raton and South Florida. So that's me. All right, let's kick it off. Gents, the top of the flight schedule calls for Disney. Looks like Disney got the most votes. Mike, let's kick it off with you. What's your bullish, bearish, neutral on Disney? What's your outlook?
Being that I am a volatility trader and I deal in probabilities, it puts a little bit of a different spin on it. If I take a look at just Disney's chart, I think it's definitely going to participate in a little bit more broad manner in any type of I do still feel is going to happen. I think the big question is going to be, will the stock get itself back above 112? And I don't know as much as the next person to say if it is or if it is not. 116, I think, is out of the question for right now. But it depends on how hard they really want to push. Now, having said that, I am basically, I deal in probabilities and I love volatility. And I believe, like one of the other gentlemen have said, a premium seller. And that's kind of how I will trade options. But taking a look at the probabilities through the end of the year, so through the end of December, there remains over a 50% probability that the stock will remain between 97.50 and 108. And there's about a 49 to 47% probability that it could go between 108 and 119.
that's a little. You sounded like a politician. There's a 50-50 chance it might go up. Yeah, but you're telling us what the options are showing us. Which, guess what? The options market is pretty efficient, and their pricing is usually damn tight.
And I think that because we've been in such I guess you can call it, volatility just gets slammed.
Oh yeah, being short vol this year has been the money making trade until it's not. So, JT, do you follow Disney over at Mad Hedge Fund Trader? What's your take
we do. Long term, we love the company. They're the content king. They're creating their own Netflix, so that should be another big profit source going forward. For the short term, though, the picture is muddled by the various merger/takeover activity going on with Fox News. So every day it's on again, off again. Will have a big impact on the earnings flow there. So I'm kind of staying away. Long term, love it, but there's better fish to fry right now than Disney. So I'm staying away.
All right, JT's looking to deploy his capital elsewhere. Lance, how about you?
Let's see if I could screen share this. Let's see.
And I went out of order. My apologies.
Let's see if can we see? Actually, you know what? I could put it up here.
Don't cut the red wire. Don't cut the red wire.
Blue.
Exactly.
Do we see the screen? The Disney chart?
I can see me, and that's a handsome picture. All right, now we can see Disney. Go ahead.
Now?
No, now we're seeing your lovely face. You had it the middle time.
Great. Yeah. All right, let's try this one more
there.
time.
Stop.
Oh, no. Okay, perfect.
Go.
So, perfect. So I'm long Foxa calls, and I have been since last week, which have worked out really nice since this news. But now we're seeing a little bit of volatility in Disney and Fox, because we're seeing Foxa go up and Disney actually green today. So I do have a chart because Disney here had a nice rally off the lows. I'm using this yellow as support. We had to move up here into resistance, and now Disney failed. So it had a little gap fill from the prior, or for 2 prior quarters ago to the upside. Now we're kind of just consolidating here. There is a little bit of premium or a little bit of volatility in Disney since the deal. I'm long Foxa, so I could really, I think if the deal happens, Disney goes down, Foxa goes up. But today, I think we had an announcement Thursday that the deal might close and Disney was green. So big news on Disney, I believe Star Wars upcoming too.
Oh yeah.
Which I heard a negative, this is just one source, a negative review of it saying it's not, I guess as popular as it's drawn out or was supposedly
really.
Be. Yeah, so Star Wars falls, maybe Disney goes up, maybe it's, buy the Disney into the Star Wars event. Media stocks, I've been the first one to say from Comcast, Viacom, I've been avoiding. I just got long Foxa calls because I saw a lot of order flow into it. But Disney, it's one, maybe for the vol sellers out there, for the option sellers, maybe a possible iron condor around this 111 to 103 range.
Mm-hmm.
By the way, there's a long history of Disney peaking the day the Star Wars movie premieres every year, and that is Thursday night. And I know that because I have 4 tickets.
Well, there you go. I was just going to tell you guys, I have some booger eater friends that are, I think, John, they're already camping out right now to watch it. And some inside sources I have from the Planet Hollywood I visited when I was in a Marine Squadron. I did a little bit of acting. They said you will be left talking about this for a while. It's going to stir a lot of debate or something. So we got 2 reviews. So I guess we're going to have to see what the market says. Steve, are you a Disney guy?
No. Okay. So you look at Disney, you look at the revenue, and here's a chart, right? And if you go back and you look at how Disney traded basically through the May of 2017, nice orderly uptrend. And then all of a sudden it just starts to trade like dog crap. Okay. Really, really high volatility, wide ranges, a lot of reversion both to the upside and downside. It has nothing to do with Star Wars. has nothing to do with Disney World, right? It has everything to do with ESPN, their subscriber numbers, and how many people are cord cutting. As soon as that catalyst came through back in May of 2017, that has been on the forefront of investors' minds this entire time. That's what caused the gap down in August of 2017. And then we saw that really nasty move in September. I think that the September move was capitulative. And since then, we've got a classic double bottom pattern from 102 to 96. I can't do math in my head while I'm talking. I think that's 6 points. So we add that to 102. We get 108. We hit an initial measured move of 110. Right now, we are in this big, dumb, ugly, stupid, mean reverting trading range, right? And the name of the game here is to use these catalysts to fade either to the upside or downside. As it stands right now, I think it's a no trade. Vol selling probably looks really good. Implied volatility sitting at 21% after the Star Wars stuff. And, 30 days from now, we've got holiday trading, right, in that window. So vol selling probably a good idea. I would prefer, instead of doing an iron condor, to wait for some kind of actual volatility to fade.
By the way, the death of ESPN also is getting to be a pretty old story. It's been going on for a couple of years now, and eventually ESPN will shrink to the point where it just doesn't make a difference anymore.
Yeah, I think John's right. I mean, every other week we get ESPN announces more layoffs. I think they're going to have, the Berminator calling all the games, and that's about it.
Here's what they need to do. They need to make the Ocho, right? I want to see all these obscure sports with low budgets on replay at 2 in.the morning. Like an Adult Swim for sports would be like the coolest thing. They did it once for April Fools, and I think that's a good business model, believe it or not.
To Shiki's Castle.
Yes, absolutely.
So good run, like Steve said. Whoa, right here, and then this shop is a lot of earnings noise. John's right. The ESPN story is starting to get old. I don't know how many more people they can cut. I think the janitor's going to start managing a desk here. But for the point, folks, that I live down here in South Florida. I will tell you, it's a grand large for my 3 kids to go there, and a grand large for me because I ain't going through that shit sober. But people continue to pay it. They could raise prices again tomorrow. So the parks, franchise, all that stuff, that's solid. ESPN sucks. And the Star Wars thing, again, for my booger eater friends, window lickers, they're saying it's going to leave you talking for ages. And if that happens to me, I kick my ass.
ESPN may be dying, but they're getting $15 for a hamburger at Disneyland. I want that margin all day long. That thing is just a giant money machine.
Now, to be fair,
ESPN is a distraction.
At the Tomorrow World, what is it, the Ray's Lounge Lizard thing, you can get a half a chicken, mashed potatoes, and green beans for $12. It's the best deal in the park. I'm telling you.
Oh my God, man! That's disturbing that you know that information. But anyway, so I'd agree with most of what I'm hearing. I'm short-term neutral to maybe there's, like John said, there's better places to deploy your capital than the Disney if you're looking for entertainment. They will be the content king eventually, maybe even tie up with an Apple. That's always been in the background discussion at Disney. Does Apple join up? But I'm not deploying capital here, so I'm gonna punt on this one. So, all right, let's go back to the top of the order, guys. Looks like we're kind of in agreement with this. Let me get back to what we're looking at here. So what's the next stock there? Google, not Google, but Google L with the L. So let's go to the top of the order, Mike. What do you thinking about Google L? And what is Google L? What type of shares?
It's Class A shares of Alphabet Incorporated.
They give you limited voting power.
Exactly.
That's the difference between the different Google shares. They more or less move in sync, though, because nobody cares about voting power at Google. No one's going to throw out the management anytime soon. And they're too big to take over.
No, there might be somebody who's going to give it a try. We've got to check in with Jeff Bezos and see if he really wants to maybe make an attempt to go after Google. And I'm joking. I believe that Google, I think, is kind of stuck in a little bit of a range here. I think that they're just probably going to try to take it out to the upside. So I still would probably at least to the end of the year, and that's kind of how I'm basing all of what I'm talking about. I'm not really going out into next year because I think that the whole game changes once we're through December, we're through year end. Then everybody gets to choose again, at least the money managers, what they want to do. They want to take profits, or they got to carry, et cetera, et cetera. I think on a probability basis, again, I think that we're kind of looking to 1,048, and that's through the end of the year sits at 50% probability of hanging out right there. So, which is why I'm kind of saying that push, then you can go again. I hate to be a politician. It's about a 49.75% probability between 1,048 and 1,153. Now, as far as trade, volatility seems to be on a good level. And so, like we've mentioned before, I think there are a lot of different option trades that people can. You've got to have some bucks. You got to have a sizable account.
Yeah, well, yeah, we could all maybe pitch in and buy a one contract for a long call diagonal on Amazon. Lance, are you a Google L guy or not?
I love the Google rebound. Let's see if I can get the screen sharing again. Actually, actually, there we go. We do that one. I'm getting obsessed with the screen sharing. Okay, we should be good now.
Yep.
I was actually selling bull put credit spreads in Google on this bounce of support here. And why I'm selling bull put credit spreads is A, I'm bullish, so I'm selling them thinking the stock stays neutral or goes up. And then B, I just, I don't have enough margin to sell naked put, which I rarely ever sell naked options, but selling a bull put credit spread limits the margin requirements. I like, the move Google had. If you look at other names in XLK, which, Google's a major component of, you have Apple, which has been pretty sideways trading. Microsoft right back near the highs. Facebook had a nice run up too, and Google as well. Tech's a little cautious though right now. Google had a nice bounce. I'm a little iffy on XLK, specifically in tech. Just because the way the Nasdaq's been trading, you have Nasdaq volatility actually going up. You can look at the XN for that. With the intraday sell-offs in the Nasdaq, I think FOMC will give some direction. But personally, I'm just avoiding Google up here. I don't want to, play it directional while it's running. While it already had a run up, nearly about 40 points in this little move here. So it's just a no touch for me right now.
All right, that's a good answer. Yeah, when something's on a tear, I tell my members either join it or get out of the way. So yeah, it might be get out of the way moment. JT, how about Google L for you?
Well, all the FANGs are pretty much trading the same way right now. We've been in a sideways time correction now for about 3 weeks. I think that continues for another month or two, and then we break out to the upside and go to new highs. That has been the trading pattern really for the last 2 years. I expect that to continue. Long term, the FANGs will be the leaders of the market as well as the banks for the next couple of years.
Yep.
So I'm bullish.
Look, it really looks like the techs do a stair step. They go up, they kind of hang out for a little bit, they go up, they level, then they go up. So I agree. And the financials too, with raising interest rates and Jerome Powell. So Steve, how about you with Google L?
All right, we're gonna do some dark magic here. So yeah, Google's in a range. If somehow we see a quick move sub 1,000, that's gonna be a great place to sell put spreads. We're not there right now. This is one I just drew up, so I'm not your broker dealer and all that disclaimer. But if we assume that first off, volatility is kind of cheap, we have seen implied volatility 15%. Volatility also tends to rise into an earnings event, but we're heading into holiday trading where it's probably not going to go anywhere for a while. So you can actually look at something where you go out and you buy a Feb 1045 straddle, and then you go out and you sell a Jan 1015, 1075 strangle. Basically, the strangle's there to help finance the cost of the straddle buy. Now, it's kind of expensive, right? This is a pretty sizable, just on a single spread. And the analytics look like garbage, but there's some dark magic with term structure that's coming into play here. Basically, if Google kind of goes range bound for the next 3 weeks, and then it starts to move into the new year, either upside or downside, and implied volatility starts to rise, you can pull 20 to 30% off on this trade. Kind of advanced, but it's a pretty cool idea.
I like that. That's not too shabby.
It doesn't suck, right? That's not a bad idea.
No, that isn't. I like that. I'm going to take some notes on that. Google, folks, I'm a Facebook, Apple, Amazon. I don't know what Netflix is. I get it. I'm not a Google guy since I got blown out of an iron condor. The Monday afternoon, they announced they changed their name to Alphabet. Nobody calls them Alphabet, not even them. So I'm just pissed off at Google for that trade like 3 years ago, and I've never gotten over it. No, I'm kidding. But out of all the FANGs, I mean, we saw a little bit of a tech wreck last week, or I don't know, a week and a half ago. But all that was, folks, was a little sector rotation out of Jerome Powell, not sounding like a lunatic, talking about nice, steady interest rate increases, and a little bit of sector rotation out of those comments from tech into your Goldman Sachs, the JP Morgan, Morgan Stanley. That was a little short-lived. Now that little tech wreck has given, and it was awesome reading whether Zero Hedge or Wall Street Journal about, oh my God, tech, is it over? The one article I shared with my members said, can the market go up without tech? And then we forgot that even happened a couple weeks ago. So Google's the Death Star, folks. I mean, it owns search. I know Mark Zuckerberg tries, they're all trying to dabble in each other's pools, and it just ain't worth it for them to dabble in each other's areas. I think they found their lane, and they're most likely going to stick to it. I think Amazon's the one, which we'll talk about in a couple minutes, which will completely go outside of its lanes, from food to buying a FedEx or UPS or bringing their own on board. I think Google's going to stay kind of where it is and what it's doing. So I'd rather be in other FANGs than Google, is what that long ramble was about. Okay, let's get back to what's our list here. What's on our list here? IBB. So at the top of the order, how are we looking at that, Mike?
I happen to be a big fan of biotechnology, and I think that the work that they're doing right now is incredible. So I think there's a lot of promise for biotech, but of course it all depends on how clinical trials go, et cetera, et cetera. As far as this particular ETF, like so many things, it seems to be a little bit stuck range, and it's about a $12 range. Unless you're willing to kind of go and start taking a look at iron condors, and if you can put those on for the several weeks, you can go to the end of the year, you can go out to January, February. The volatility, I don't think, is probably much of anything. And I don't particularly like to get into selling premium until I see, an IV percentile of about over 50%. So doesn't mean that you can't do it. Really choking on your own. Well, I'm waiting.
As the moderator, I get to do whatever I want to do. So I'm going to jump in the middle so I can give other guys time.
Drunk with power.
Exactly. Mussolini. I don't trade biotechs, zero. At peak 6, actually, it was a red symbol. You were forbidden to trade biotechs. We had a guy go around that firewall, lost $4 million in one neurobiocene, whatever. They approved the 5 milligrams at 10 milligrams. It's a sure bet they're going to approve the 15 milligram dose. And they did, and the stock went out and down 80% a day. I don't trade biotechs. I think fricking the B word, which we're not going to say today, might be a little safer. So I'm out of this conversation. Lance, I'm going to move on to you. I'm not a biotech guy, period.
Great. You say the B word and then you run away from it, huh?
Oh, that was a total drive-by, man. I put a fuse on that one, so it's about to go off.
Yeah, I'm not going to bring it up, although I was going to talk about one of them. That was I guess a medical biotech company that changed its name, and now it's very popular. But won't say the ticker symbol. Maybe someone in the chat will post it. But IBB, I don't care for. Yeah, I think it trades like crap. I know now it's what 105 a share or so. I don't care for it at all. If you want to dabble into biotech, obviously it's very name specific, and that could be a show all by itself. I prefer the XBI just because the options are tighter, the spread, and I feel like it just trades well, and I actually see order flow in XBI, rarely IBB. There's big biotech stocks like some people might have heard of Biogen and Regeneron, and then you have your Celgene or Gilead, names like that. They're all a dice roll. Sometimes I'll see large Biogen calls and I'll hop on them, but then you have especially if you're buying options on, or you're buying debits, spreads wide and then the volatility's high. So I pretty much avoid biotech unless it's really name specific and I see massive flow in the options market and the risk versus reward is there. But I'm not your biotech guy, and I don't plan on being that guy for unless I go back to med school and learn all these things. Which I
the only people that should trade biotech are members of Congress and their staffs who are excluded from insider trading laws. Exactly. They know when things are going to get approved or disapproved. So there's your government at work. JT, do you dabble in the IBB?
Yeah, they're not excluded anymore. They're now liable, just like we are.
Well, I'll believe that when I see it, when we start holding people accountable. How about IBB, JT? Do you trade that at all?
I think biotechs are screaming buy here. I think they'll be a major leader in the market next year. People are sick of buying expensive stuff. They're going to want to rotate into cheap stuff at some point. The long-term fundamental argument for biotech is fabulous. They're about to cure every major disease in the world. If you don't want to buy something like IBB, you can go into Celgene, which has just had a massive sell-off and is forming a bottom. You could pick up a quick 25, 30% on Celgene. They're not happy with IBB. So, yeah, bullish, looking to get in. I'm basically going all cash for the rest of this year, but, biotech will be at the top of my list to get into next year.
Here's the tough thing before I let Steve go about biotech is before we find out about something that could be cool and change the world, some investment banker, private equity folks have either bought these guys or they're already in it. So it's very tough unless you look at this stuff on a day-to-day basis. And that's just, to me, it could be a throwing dart. But you guys on the West Coast are more prone to intel than I am.
Nobody, even the people who work for these companies, have no idea what the stock is going to do, or what the next phase 3 trial is going to do. So the trick is you buy them when they're low, and when they're low, that's obvious. You can see it on the chart. When they're high, you get out of them. You just trade them, and let the fundamentals take care of themselves. That's the only way to do it.
Well, there you go. Buy low, sell high in the biotechs, and
it's a revolutionary new concept. I'm patenting the idea.
There you go. All right, Steve, how about you and biotechs and IBB?
Sure. I'm going to disagree with nearly everything that everyone said so far. IBB is a fine trading instrument. It's great for spread selling. You just got to be a little smart with the liquidity. Scale in, scale out. During that horrendous sell-off that we saw from 113 to 101, I think IBB split was at 3-to-1 recently. So we were trading in the 300s. We had really, really nasty move from Celgene, really nasty move from AMZN. And so for me right now, what I want to see in the sector is see how it trades into 109.5. That's previous resistance, previous supports, big pivot level. We can trade above that and trade sideways and then trade again. Then we've got evidence of a constructive trend. I think it is okay to play single biotech stocks if you're smart with your risk. And the biggest thing is to look at the implied volatility, right? If you see an implied volatility of like 200%, that means that there's event risk coming up and you should probably stay away. But if you look at some of these more, obviously AMZN is going to completely prove me wrong or Celgene, because it had that really nasty Alzheimer's. They canceled the drug and it traded from 120 or 140 all the way down to $100 a share, right? But as it stands right now, all I'm asking myself is say, all right, let's go through some of the large components in biotech, some of the larger cap names. Which ones don't suck technically right now? And one of the best ones I see is Illumina. This is a pullback to breakout pattern. So it had a really nice move, 212 to 230. It's pulling back. It saw a pretty nasty move. If we get a little bit of a lower low, maybe shake some people out, that's going to be a great place to initiate some bull call spreads. So you don't just have to look at IBB. You can start to look at some of the larger components of it, some of the larger cap names that didn't get absolutely destroyed. Try and play that momentum as we head into 2018.
I think that's a great summary, Steve. I appreciate taking the red team on here. I got to be honest with you. I remember being at Marine Corps Air Station El Toro in 97, 98 and trading ImClone. Everybody remember ImClone? IMCL. I remember buying a brand new 89 and old Porsche based on ImClone, but it got into being a little Wild Westish for me and throwing darts, and I'm just not a dart thrower. So hopefully everybody listen to Steve, because that was a good rundown. Twitter, man, let's go top of the order for Twitter. Mike, what are you looking? Do you like Twitter? Do you not? Do you like 480 characters?
Do not like Twitter. Never have. Being that I live in San Francisco. This is where they're based. City gave them quite the tax deal. We'll never see the money. Not a Twitter fan. Never have been. I don't quite get it. I know that it's extremely popular and a lot of people tweet. I think that, personally, I think the stock is a huge sell. Doesn't seem to be widely received. I mean, it's had a decent run. It had, threw out a good earnings report, jumped up, and basically is stuck again. And so again, it's in a range, and I'm a seller. I'm a seller.
Excellent.
All the way.
All right. Good. Pounded into the dirt. Lance, are you a Twitter guy?
Oh man,
Apparently you are. You post a lot of trades, but how do you feel about the company?
I do. Yesterday there was massive Twitter call flow. I think the stock was up like 4%, and I was in next week calls and flipped them out for some nice gains. And by the end of the day, I chickened out and sold them all. I didn't want to hold them overnight. And then today, I believe Twitter was down.
Was that, Lance? Was that totally on flow, or just you?
Totally on flow. Usually when players come after Twitter in the options market, they do it short dated, meaning they don't want any commitment to owning Twitter long term. And it's very it's very scalpish.
Don't put down no commitment. It got me through college.
And there you go. Yeah, so Twitter was down today. Looks to be what, nearly 2%. It's a stock you can play, you can scalp, but you don't get married to it. I hear people, oh, long Twitter, I've been long it. Well, if you were long Twitter for the past, 3 years, what has it done for you? Nothing. It's caused a lot of pain.
Yeah,
right.
It's
a lot of headache.
Yeah.
Exactly. And then every time people think, oh, it's going to fill the gap, what does it do? It sells off again. We have a little triple top right now going on. I don't care for it. I kind of consider it out there with like Yelp, these apps that are coming on the iPhone that I just, I think because we're all in the trading community, we like Twitter for news or we use it as a resource. But I think to the general public, Facebook is more popular. And
yeah,
I just think there's more avenues. Twitter, all it is you tweet. They make money on ads, users. Eventually, other stuff's coming around. Can't believe I'm saying this, but I'd probably rather be in Snap Junk than.
I don't believe you're saying that either. John, I'm going to tee this one up to you. John and I love to have our spirited debates. John, how come the vehicle that this president of these once United States uses is this? You would think it would be printing money with that type of exposure, but how do you feel about Twitter?
Well, the president is the only thing keeping the stock from going to zero.
I was going to say that.
I run into Twitter people all the time in the city. They're all depressed. They're all looking for other jobs. They ask me if they can have a job. It's just, this is a company that has absolutely no respect in Silicon Valley because they have not updated their business model in 10 years. So everyone's waiting for this thing to either die or get taken over for their mailing list. So,
well, wait, John, they innovated. They added what? 240 characters. That was their biggest innovation.
Yeah, I know. It takes a little bit more than that to move the needle these days. So
correct.
I think it's a miracle the company exists at all. And I think without the election last year, they wouldn't exist.
Correct. Putting your, or all of you, Steve too, putting your thinking caps on. I think it's a once a year you can set your watch to it or your calendar when some X is going to buy Twitter. You feeling any of that, John? You hearing anything?
It would have to be a really cheap price, like $1 or something.
Yeah.
Let's all buy it right now.
What have they got? What cutting edge technology are people going to pay up for? Answer: nothing. Maybe they'll get some good engineers out of there. Who knows? But this thing is an avoid in all capital letters.
Thank you. I couldn't agree with more. Steve, what's your take on Twitter here? You're going to disagree with all of us again?
I'm going to red team it again.
Yes.
I'd like you all to just take a step back, listen to the entire conversation that everyone just had.
Oh, he's going to get a squeeze him out.
Hold on. And instead of saying the company Twitter, say the company Yahoo. Their engineers are miserable. They're looking for new jobs. No one's going to buy them out. Twitter is what Yahoo was 5 years ago. In fact, back in 2016, I wrote an article exactly talking about this, how the analog of Yahoo is going to play out in Twitter. The original co-founder comes back. Somebody tries to take him over, but the bid falls through. That happened with Microsoft and Yahoo. It's currently happened, right? It already happened in October 2016, right? Here, hopefully you all can see this. Here's the chart I drew back then. Now go look at a chart of what Twitter's doing right now. What's probably going to happen to Twitter, and I'm long-term bullish, is that they're going to pull something out of their butt that will be magical. Yahoo, if anyone remembers how Yahoo traded before it got acquired, it wasn't Yahoo's business model. It was the fact that they were a large shareholder in Alibaba that caused all that momentum. So something out of left field, some kind of IP that Twitter owns, Periscope or something along those lines, will cause investors to pay attention again. And no one will give a crap about the main product. They're going to start looking at basically whatever that side project is that explodes. Okay, there is, in my opinion, a lot of built-up value. Who said it? Some other tech CEO said it, where Twitter drove a clown car into a gold mine or something along those lines, right? They're gonna find gold one of these times. They're gonna terribly execute on it, but that is the kind of chart pattern I'm expecting over the near term, and this is what Twitter looks like right now. So
yeah, I'd rather buy Bitcoin than Twitter right now.
And that's fine.
Where is Twitter in artificial intelligence?
All right, everybody stop.
Well, you can say the exact same thing about Yahoo, right? Yahoo did not lead tech. They just happened to own shares in Alibaba, and something like that is going to happen in Twitter. Twitter's a great put sale covered call candidate. It's going to be dead money for a while. So that's my thoughts on it.
Did everybody on the panel just do a shot when JT mentioned Bitcoin? I did. That was our rule of engagement. Steve, good analysis. I got to ask though, man, especially if you have some feelers out there, what's in the Keebler Twitter elves? What are they cobbling together that they're just going to spring on us that doesn't exist anymore or currently exist?
They're going to realize that the noise that they have is not useful. As soon as they verticalize their content into sports, they've already got live TV sports deals.
Yeah, streaming.
And they're going to be Periscope, and then what'll happen will be like, oh shit, Disney wants to buy Twitter all of a sudden. It'll be some stupid news like that, and that's going to cause the stock to go higher.
I got to be honest with you. I'm going to look up verticalize. I think you made that word up.
I did.
I'm going to get back to it. Nice job, Dan. Nice job. All right, guys.
I thought verticalize was illegal in all red states.
Not in Alabama. Roll Tide. All right, let's go top of the order, Mike. LRCX, Lima Romeo Charlie X-ray. What's your take?
Lamb Research. They disappointed, obviously, this past quarter, and have done a nosedive. But I just kind of sit in a range, maybe dip below 80. I don't think it goes too much below 175, maybe 170, maybe down there, and then rallies. At the end of the year, you just kind of pick up.
I don't want to offend all our PETA people on the webinar. That kind of looks like a little bit of a dead cat bounce right there, and it's a little bit of a falling knife right there.
Off of that low?
Yeah.
Yeah, but just open up a longer term screen.
LRCX.
That makes a lot more sense. I think, again, an Elliott guy, I see 1, 2, 3, 4. Now we're coming down doing a 5. Take it down, like I said, 175, maybe 170.
Okay.
It's $11 from here, maybe even a little bit more. And I think you start to scale in as it comes off.
Okay.
And you can put a stop there, or you can just, like puts. I don't know. Yeah. There's a lot.
Lamb Research. Lance, what are you in this one, or look at it at all?
No, I some names I avoid, and there's nothing making me want to run out and trade this name. I don't see anything in the options market. The stock went from 220 to 180. Historically would have a fantastic run. Selling off on volume, which is always good for the bears out there. I don't know if there was news out there of why the stock, after the bounce that you described, it is not looking very bullish to me. If I was in it, maybe I manage a trade or look to start putting in some protection, but I'm not. I'd rather look for better opportunities out in the market.
That would be a punt to JT, LRCX.
Well, I had a 3-hour dinner with the senior management last weekend. They did not disappoint on their earnings in November. They announced earnings up, revenues up 50% year on year. What it was a buy the rumors, sell the news on a stock that had risen 400% in less than 2 years. Company expects revenues to double over the next 2 years. And therefore, I expect the stock to also double over the next 2 years. It's doing the same sideways type correction that all the other FANGs are doing. So I would look to buy this, scale in, buy a piece now, and if we drop any lower, buy some more, and if we go any higher, buy some more. A real gift on this would be the 200-day moving average on 161. And if the market goes dead in January, which I expect, we may get a shot at that. So long term, there's another double here, and I'm looking to get in.
John, how do you play your long terms? Do you do synthetic stock, long call diagonals, or just buy?
For my own personal account, I would do a long-term leap, January 2019, say 200, 220, for example. That would get me a 100% return in a year. For my trade alert service, we're much more conservative. I would probably do something like a 160, 180 call spread going out to January or February, and that would give you a 25% return on the position. Lower return but a lot lower volatility and a big cushion before you lose money on it. So many ways to skin a cat. The basic idea here is the trend in this is still up.
Okay, JT's long Lamb Research. Steve, go ahead and prove us all wrong again.
All right, so this is a chart of LRCX, and the lower pane right here is a correlation with that and SMH. Sometimes you're looking at individual companies. Other times you're just playing whole sectors. And the correlation is darn near 1 for LRCX, right? And I'm just going to make sure I'm not being an idiot here. Yeah, integrated circuits. Yeah, it's semi company, right? And semiconductors, if you look at SMH or you do the stocks, strong March higher from 90 to 105, and then the rug got pulled out. So there was, and it's okay to see this. This is just simple volatility expansion to correction to the downside. When you see this, normally there will be a lower low on a momentum divergence. Into that lower low is where you can look to start selling put spreads. If we get it quick, here's a good trade idea for you all. Sell to open the Jan 160, 155 put spread for 90 cents. You're not going to get that unless LRCX trades down into the low 190s. The reason you do this kind of setup is so you let the stock come to you, okay? You let it sell off, and then once it gets to your expected price, you sell that spread. So I think that this on its own merits is going to be a pretty decent trade setup if we do actually manage to get back down into the low 170s.
Yeah, I would totally go with that trade.
There you go. Yeah, I was going to say you and JT, similar mindset there. Good. I have no idea what the hell this is, so I'm going to yield back the remainder of my time and not talk about that. I just don't. I don't talk about things I don't really know that much about. But let's go to the next one. This should be a good free for all. NVDA, Mike. This one's been in the news lately and a lot of all over the place. Where are you with NVIDIA?
It has been in the news, but NVIDIA, to me, is very similar to biotech was to you. I got burned in NVIDIA years ago, tossed it into the trash, and never put it on my screen again. So I don't follow it. I have no idea. So
You're dead to me, Fredo. You broke my heart.
Fredo, absolutely correct. So I'm going to yield to people that trade it.
Let me yield back to the gentleman from Alpha Shark. Lance, what do you think about NVIDIA?
So NVIDIA's
area.
Yeah, NVIDIA's one. I will, I like the liquid options in it, and I'll short-term trade it. But again, I don't get married to it or any commitment. The SMH, the semiconductor ETF. Your names like Micron, NVIDIA, are all moving pretty much in sync. I know Micron reports, I believe, the following week. So I think, if Micron beats and goes up, go on the video, follow with that correlation there. The only thing, and I was looking at Micron today for a trade, and NVIDIA as well. The only thing that kind of gives me a red flag is I understand there's profit taking going into the end of the year on these strong names like Micron, NVIDIA, but they're starting to look like early signs of AMD, the chart. Not saying that they are AMD. But if you look at AMD, it's like every bounce people try to buy, and it just ended up after bear flag, after bear flag, after breakdown, after breakdown. And I'm starting to see early signs of that in NVIDIA and kind of Micron too. Obviously, earnings are going to be the event for that. But the other half of me thinks, okay, was it a dip to buy? And then are you going to have big rotation back in semiconductors and everything's good again? Possibly. I just don't see it yet. So I'm not actively looking to put a position on a NVIDIA. Maybe a dice roll ahead of Micron earnings, but that will be next week. Not right now. Just yeah.
I love the face that made the trade, John.
Yeah, looking at the chart now.
John, I know you run around in the space. You got some strong opinions. What's your opinion on NVIDIA?
Well, it's the identical story and the identical chart to Lam Research. Digesting a 400% move in 2 years, which we caught. Another double over the next 2 years. If you look at any of your high-end Christmas presents, if you have kids, there's an NVIDIA chip is in almost all of them. Yeah, long-term bull, want to buy on the dip. If you can get the 200-day moving average, consider it a gift from heaven. Probably won't get down that far unless we have a major meltdown in January, which is a distinct possibility. So I'm the bull on NVIDIA, and I'm going to be playing it from the long side.
All right, JT going long on NVIDIA. Steve, you cover this name?
Yeah, exact same premises, Lam Research. It's if you're trading this and in the short term, if you think you're going to be a great stock picker, relative to the other semis. I don't think that's the right case. If you're playing NVIDIA, you're playing the whole sector right now. So same kind of premise. If we get that lower low and a momentum divergence, sell the Feb 155, 150 put spread for around $1. You kind of want to see that pretty quickly. You'd want to see that move to. I just said the low 170s on Lamb. Yeah, low 170s on NVIDIA. If we do get that, you can sell some put spreads and get some really nice time decay on the trade.
Not going to dispute a word you just said or John said, so I'm going to be flying formation on you guys. Yes, and ditto to all of that at the same time. Very good analysis there. All right, what do we got? Ooh, we're getting hotter here. BA, Boeing, defense stocks. Mike, how you feeling about us trying to just bomb the shit out of the world into freedom with your Boeings, your Lockheeds, your General Dynamics, all those guys, specifically Boeing?
Well, I think that they're thinking that it's a good deal because they're going to keep their dividend, and so everybody's going to love that. I think that Boeing may have a little bit of trouble, but I think it's going to try to break above 300. So I think that the bull stays in place for a little while. But I'd be much more interested in looking for a pullback, seeing, doing some Fibonacci numbers on it and seeing, what the potential is for it to gum. And then look to participate then, from a lower level. I like the volatility level in Boeing right now, but how you want to play it, is a tough call. But there's a lot of things you could do. I would probably tend to just wait for the stock to come in a little bit, and then prepare for what I think is going to happen next year, and I think the rally will continue in Boeing.
Okay. All right. Yeah, I'll go with Dan there. Lance, how about you and Boeing? I'd rather put my money somewhere else in defense, but how about Boeing specifically?
The name is, to say it's had a nice run, would be an understatement. To come out and say, "Oh, we'll sell it or short it," I think would just be
you'd be out of your
silly.
mind.
Yeah, I think it would be a little silly now. I feel like some names with the president getting elected have just been on a tear, and unless something happens politically, I think they'll continue to probably gain some bullish momentum. I'm not actively looking to get into it, and if I had said that 6 months ago or so, obviously I missed a big run, but just like some people have names they don't trade, I don't really look at Boeing ever. As odd as it sounds, I just really don't see much option flow into it. And maybe 2018 will be the year, but right now I'm not actively following it.
Well, in a Boeing is at the whims of defense contracts and airlines canceling orders or ramping them up. It's a little choppy. I'll tell you my defense pick in a second. How about JT? I know you're very big into this space.
We've been in this since the 70s. We got the 400% move on it. I think Boeing has $400 written all over it. All you need to know is that China has to buy 1,000 wide-body airliners over the next 10 years, and Boeing is going to be the #1 supplier of those. Defense isn't really that important to Boeing. Their main business is commercial. Their order lists go out several years for the 787. So, the fundamental case is there overwhelmingly. And I have fond memories of flying around on Air Force One, on the original Air Force One, which was the first ever produced Boeing 707 during the Reagan years.
Wow, look at that. All right, now it's name dropping. I feel embarrassed. Steve, how about you with Boeing?
So, look, it's a Dow component that's up over 85% this year. You could probably run some statistics and say, okay, what are the odds that we see that kind of performance in a Dow component the year after? I would probably bet the under on that, because that'd be what, a 550?
Like 101.
What tends to happen in Boeing is that you have these moments of brilliance where you see this strong month or two to the upside and a catalyst, and then it goes sideways, right? See a catalyst to the upside and then sideways. I think that we're at the tail end of this most recent move higher, and the odds are that we, see some sideways action as we head into 2018. I still can't believe it's 2018. Here's the trade setup I like. This is a Jan-Feb 290 put calendar at 435. It's basically a bet saying, you know what, within the next 10 to 15 trading days, we're probably going to see some sideways action. You know, Boeing, we're trading what? We're trading at 290. So the bet is we're probably not going to see a lot of strong movement either to the upside or downside within the 10 or 15 trading days. There's some other advanced considerations with this, but that's the overall idea. With this trade, you're looking to pull about 10 to 20% return on risk on this particular setup.
Very good analysis there. Well, let me share my screen here. I'm a Raytheon guy, and I'll tell you why.
I was going to wonder if it was Lockheed. Lockheed looks pretty good. Really.
Lockheed Joint Strike Fighter. I used to fly the McDonnell Douglas F-18. Now it's the Boeing FA-18. So Boeing, like John said, it ain't super defense. It's more commercial. That's not really a bad climb schedule, to be honest with you. But if I were to, and John's right, just more of a transport than a defense. So I'm going to use my moderator law and go in the defense industry. Folks, if you look at a Lockheed Martin or a General Dynamics or a Northrop Grumman, you have to remember that something is in the guts. I sat behind an APG-65, APG-73, and AESA radar. All the cool Whiz things that are in airplanes come from Raytheon. This thing's had a monster. Come on, look at that. Forget about it. And we had a nice pullback right here on earnings, and we bought that dip. We've been doing some good work in our Med Options Trader service. So I'm a Raytheon guy. You want to buy even Boeing. Boeing, even though it's commercial airliners, has Raytheon. John will tell you Raytheon cockpit instruments. So buy what goes in everything. I wouldn't go single stock. Well, this is single stock. Duh. I wouldn't go with a Boeing is, I guess, what I'm fumbling through. So I like Raytheon over Boeing. So that's my take on that. Okay, let's. We still got. We went over on time. We got to get to this one, guys. So let's do a number 8. We'll go a little bit over. We all got to do an Amazon. This will be fun. Mike, how are you with the Death Star? Are you aligned with the Rebel forces, or are you with the Darth Vader?
I like what you called it. Sorry. I am actually a Amazon fan.
Yeah.
I like the stock. I like the company.
Bojangles?
You know,
whatever you want. I'll be down here in like 2 minutes.
Happened. Amazon has seen a run.
Lance,
and
turn up the mic.
Everybody go mute.
Yeah, really. I think everything is going to get wrapped up into the end of the year, and so I would be waiting here. And I'm going to let Steve give those option trades because actually I like the last one he just gave, and I wrote it down, Steve, so I'll let you know.
Great.
Blue Horseshoe Laws, Endicott Steel. Oh, shit. My mic was on.
Your mic was on.
So you're a buyer of the Death Star there. Lance, how you feeling about Jeff and the Death Star?
Wait, what happened? I had a conversation for a minute and I hear Death Star hit the tape.
Well, no, I think of Amazon out of all the fangs as kind of the Death Star. You take a look at a picture of Jeff Bezos like 10 years ago, and now you look at him. Holy crap, man! He looked like a booger eater, and now he looks like a killer. What's your thoughts on Amazon?
I think he's training with Stallone, if I recall correctly. You know, he's starting the next Rocky. The only, I guess, negative thing on Amazon is I feel like every retail investor is in it. When I see something like that, I get a little scared because, you know, after last quarter earnings where the stock gapped up, it was a huge move compared to what the market makers were implying. I would like, you know, a huge pullback to 950, 975 before ever even looking at it for a long-term position. I'm actually a fan of retail, like mall retailers, like Urban Outfitters, A&F, AEO, LB brands, Target, you know, even like Walmart. So,
what are you, like 90 years old?
Yeah, I know, right? yeah, I don't want to say Macy's, but
No,
I
you guys
sort
all
of put
the
up there.
Christmas shopping in Sears.
Yeah.
I'm gonna
So,
exactly.
yeah.
So Lance still gets the Sears catalog delivered, and that's where he gets his Christmas presents. He circles
Well, I
them for
mean,
Santa.
the shirt, I don't know if you could find that on Amazon or, might have to go.
I actually gave that to Goodwill a couple months ago. I'm glad it ended up somewhere.
Yeah, that's where I got it. So I don't care for it. If I'm looking for growth, right, with the market at all-time highs, and I'm looking for names that can squeeze up that nobody's thinking can move, especially if I'm playing in the options market. And Amazon, if the overall market holds and everything's good, yeah, Amazon's probably going to go up. But if the market's flat or the market's choppy and people need to see yield and they need to see growth somehow, people are going to bottom fish into these, pardon my language, dumb mall stocks or these dumb retailers that nobody likes. If you look at some of these names,
Under Armour.
I mean, look at Skechers. Look at Under Armour. Possible squeeze coming in Under Armour now. Nobody thinks about it, but when you have negative review after negative review, and then there's some kind of good news. You look at a stock like Etsy or A&F, and they can move 20% in a month or so. I don't think Amazon's going to pull something like that out of the hat.
JT, I think you had dinner or Jeff Bezos. What's your take on the Death Star?
Yeah, I worked with him at Morgan Stanley for a couple of years.
That's right.
I'm drinking the Kool-Aid, and I think they're taking over the world, and the stock could double from here. Yes, it's wildly overbought on a short-term basis, but the only thing that could really knock this would be antitrust enforcement, and that is, Trump is supposedly shopping around the idea of an antitrust suit. So, other than that, they'll just gradually take over a big chunk of the world if people let them.
Folks, don't, in the middle of all that, there was a nugget there. Don't discount the antitrust issues, because as he does become the Death Star, buying a UPS or a FedEx or starting his own as his octopus goes out, John, you and I talked about this like 3 a.m. We were laughing at the Jeff Bezos tweet on election night. A year during the primaries, he sat on stage at some, tech conference, and he said, "I'd love to put Trump on a rocket ship and just blow him into space," and everybody laughed. And then on election night, we were laughing at his tweet going, "Congratulations, President-elect." I don't think Trump's that evil to just go vendetta-ish, but it's when an octopus does really start taking over a lot of stuff, well, that's the Department of Justice job to make.
Well, look at the AT&T merger. It's totally turned down antitrust action of the last 70 years. So, if that one gets blocked, anything can get blocked.
That's exactly right. So, okay, Steve, we've been waiting for you, man, to prove us all wrong. What do you think about Amazon?
All right. It's going to be time for independent. I'm just going to throw it out there and say, if we get rips, you do calendars. If we get dips, you sell put spreads. That's just going to be the name of the game until we see the next earnings event. The main catalyst right now is strictly a function of AWS numbers, Amazon Web Services. It's what caused such a large move on earnings. It's what's caused the large volatility to the downside over the past 2 weeks. And any kind of large deviations from the expectations with respect to that, because Amazon runs a very, very low margin retail business. They tend to try their hardest to operate at a loss, and any money they just jam back in CapEx. AWS is one of those things that is a lot more scalable, right? So that's going to be the one thing. Super, super long term. If you really want to get your mind blown here, I think that Amazon is the progenitor for the next evolution beyond the nation state. So that's a completely different discussion. So we'll just keep it with the short-term time frame. Put spread sales if we do manage to get a lower low. If we see some kind of a rip up to 1250, calendars or iron condors is going to be a great setup in that name.
My man, copy paste, agree with all that stuff. I'm too poor to be able to buy like a synthetic stock or long call diagonal out to Jan 20. But if I could get long-term bullish out to the future, man, if we could all pass the collection plate around. Amazon, you're exactly right, man. He's launching stuff into space. He's taking over. That's the gorilla, in my opinion. They could sneeze and take over a Facebook. And I remind my traders at TGO, my members, that I wear two suits, a flight suit and a $6,000, Gordon Gekko like Armani. Here's my attitude. Amazon last week had horrific press, working 10 hours a day and they can't go pee and they're falling asleep on their station. As Gordon Gekko, I went, that's awesome. In my flight suit as an American, I'm like, that's horrific and that's brutal. So it's I love it, but it's one of those hold your nose trades. We've been trading bull put spreads and at TGO and the Mad Options Trader service on Amazon, and it's the gift that keeps on giving.
They're not hiring 50,000 people because they think business is slowing down.
Correct. And that's the point. And they optimize the hell out of the people that they have there. So you put on your
place to work.
Oh, it's horrific. So you put on your Gordon Gekko suit and go, I really don't give a shit. It's good. And then all of us can sit here and go, yeah, that ain't kind of cool. But guess what? We're here to make money and invest so we can keep those opinions to ourselves and a beer. You know what? Let's at least do number 9, guys. I'm sorry I went over. We had some good content. It's an energy trade, oil, WTI, catching a bid finally. Let's at least close out on an ExxonMobil. And one of the reasons I want to do that is I put an ExxonMobil on trade today I want to talk about. So, Mike, do you follow ExxonMobil at all?
I don't follow ExxonMobil, but I do trade crude.
Okay.
So I can't really speak to ExxonMobil because I just have been out of that long time.
Well, don't go specific stock. I remember when, what was it, a year and a half, 2 years ago, the world was ending as oil was going through $30, cats and dogs living together. I remember ExxonMobil, all these companies, Schlumberger, these guys clipping 15, 30,000 dudes making $100,000 a year in Midland or out on a rig. The research I've done says ExxonMobil sales are trimmed profitably for about $35 to $40 in oil. So they should be printing money. What's your then tell us your outlook on oil then, either tactically or strategically?
Crude I think goes above 60.
Yeah.
It may get as high as 70, 75, and then the powers that be will decide, okay, we've sold enough, and then they let it come back in.
Interesting. Okay, I like that. Lance, what's your take on ExxonMobil, or if you don't like it, the energy sector?
I like energy heading into the year end. I think it's been beaten down, and people are going to need to. You're going to have people bottom fishing, buying stocks that have been beat down, trying to get that return closing out the end of the year. So I like Exxon. I like MRO. Also in that space, I like a lot of energy stocks. XLE had a trend line breakout recently. Exxon, I think it's totally fine. Especially heading in to 2018, a nice move off the lows from 80 to 84, a little pullback here, and I think if you as long as you have crude stabilize and continue to hold, you should have some more bullish flow here and bullish price action in Exxon.
Okay, JT, you an ExxonMobil guy?
I am totally. I'm a bull. I think oil goes up to low to mid 60s sometime in the first half of next year. And don't forget, with ExxonMobil, you have that 5% dividend support, which brings in a lot of long-term pension fund buyers. Mm-hmm. You had a gift, by the way, in mid-November when the thing backed off to 80. That was the place to get in.
Mm-hmm. Yeah, it was trading in a range there at 80. We were doing iron condors for 6 months.
Yeah, right.
And then it dropped out of that bottom range. So we sat there on our hands, and a month ago, as it came back from the depths of hell, it looked pretty good. I'm with you. I'm a Jan 20, Jan 19 long call diagonal, and we have an iron condor on the front months. Steve, lay your ExxonMobil on us, my brother.
Sure. This is about as clear cut as it gets. There's a very clear level at 84. That level has been tested 1, 2, 3, 4, 5, 6. This is our 6th retest of 84. It has done jack for the entire year. We could call it the dog of the Dow. We could expect rotation. Implied volatility is pretty dadgum cheap. 12% vol on ExxonMobil. That seems like a reasonable buy. This is about as cheap as you're going to get. right? Buy to open the Feb 85 call at 85 cents. It only costs you 85 bucks. If ExxonMobil runs to $86, you make some money, right? So the odds that what the options are currently pricing in are lower than what I think will happen, which is why a call buy currently makes sense in ExxonMobil.
I like that.
By the way, that's why we didn't buy it, is the vol is just so low on the option. There's almost no money in any options type.
It's so much more capital efficient to just buy the calls than buy the stock right now.
It's the only way to do it.
Correct. I'd agree with that. Like I said, I'm a bullish ExxonMobil guy. We put on a let me bring up my chart and share my screen. We did for John and I service here. Let me get in here, share the screen. Share. I mean, you just can't. Like I said, their sales, not trails, are trimmed for. I was right here. I think literally at that moment, I put on a Jan 19, and then that happened. But as Steve pointed out, look at this thing, man. This was a gift for about 6 months. I turned a $7,000 losing long call diagonal into an $11,000 gain, as J2 alluded to when it kind of said, "All right, I'm done with this 80 range," and we got out. We put on a new Jan 20 here, and then we've been trading the front months. I think it's going to get into this. It likes this trading range, barring a black swan event. Saudi Arabia, Iran, Yemen war, all that type of stuff. So very good trade. I'm a Jan 1920 guy, and then trading the front months. So very well discussed, fellas. All right, man. Sorry we went over by about 18 minutes. That's my fault as the pilot in command here. I will do push-ups for everybody, but let's go ahead and go around the room. Mike, why don't you let us know how we can get a hold of you and see what you do.
You can contact me at michael@logicalsignals.com or michael@mgf1partners.com. The website really is going to get updated because I'm trying to get ready to do the new style of trade room that I want to do, which is, like I said, it'll be more of a coaching room, and so therefore to be on a limited basis. Again, I'm basically a futures trader right now, and I have core positions and I trade options with those, but I run algorithms, so I have AutoTraders and I run them in the futures markets. And so I'm looking to pick up some additional coaching who are having a hard time getting back into being consistently profitable. And so I work on a lot of the psychological aspects of that as well. And so you can contact me, and then year. We lost somebody.
I think the whole thing kicked out.
Yep, we lost Whiz. David,
do we have a co-pilot? Anybody want to be the co-pilot? We just had our guy eject.
Yeah, my screen froze for a second too. There, I thought my internet had gone out, but yeah, John, do you want to go next?
Yeah. If you want to show my slide, I have it up on screen share. Can you see it?
Nope.
You got to switch to screen share.
Yeah, let me go back in there.
Top left, the green button there.
There it is. Yeah. Yeah, I'll take that one. Start screen share. How about that?
Yeah, I can see it. Yeah.
Okay, yeah, we're the Diary of a Mad Hedge Fund Trader, global long short macro trading strategies. We send out about 250 trade alerts a year on stocks, bonds, commodities, foreign currencies, precious metals, energy, and real estate. You can find us at www.madhedgefundtrader.com. And I have one more slide to show you. If I can work this magic. Let's see, working two screens can be challenging. There we go. Here's another one. Can you see that?
Not yet.
Let's see. Let's try it again. Screen share. Yeah.
Nope. Still your Beautiful smiling face.
Yeah, we don't want to look at that. Let's see. Start screen share. Okay.
There we go.
Yeah, and that's our daily audited performance, showing that we are at an all-time high, up 56.62% so far in 2017, with essentially no real drawdowns for the entire year. And our 8-year return on this is 276%. So if you want to make money, this is the place to come. John Thomas at the Mad Hedge Fund Trader.
Awesome, JT. Appreciate it. And Steve, how do we get a hold of you and what you do?
You can find me at investingwithoptions.com. We have a trade service called Income Lab, where a lot of the trades that we just talked about will actually go out to clients here sometime soon. Once we get those trade alerts to trigger, each trade alert comes with video analysis for entries, adjustments, and exits. I would highly recommend, when you have about an hour over lunch, go to my YouTube at Investing with Options. We just did a 45-minute case study on a recent trade we did on Amazon, some very successful calendar spreads. So you can see the approach that we use, how to build aggressive and sustainable wealth in the options market. Thank you all so much for having me. Have a great night.
Awesome, Steve. Thanks for coming, my friend. Good to see you again. It's really easy for us folks here at Top Gun Options. If you're a skier, this will look familiar to you. Just kind of scroll down. We have kind of, we're not a one-size-fits-all, man. You're not doing double black diamonds if you don't even know how to spell the word options like some of my Marine buddies. No offense, John. So we have beginner portfolios for like accelerate retirement, front month hedges and long-term trades out to Jan 20, Jan 19, like you heard us allude to tonight. And we also trade weekly options. We put on a nice SPX bull put spread that could potentially make, I think, $1,800 on about $4,500 in risk by Friday's PM settlement. So that is me, TopGunOptions.com. All right, David, sorry we went over it for a little bit, but we covered a lot of ground, and I think it was worth it, my friend. I'll give the controls back to you. You have the controls.
And I think we skipped Lance in the midst of the connection issues.
Well, I really didn't want to hear from Lance anyway, but Lance, go ahead, man. Sorry about that.
It's the shirt. It's the shirt. So yeah, so you can find me twitter.com, Lance Ippolito. I have quite the entertainment on my Twitter from my roommate trading Bitcoin while drinking at late night, actually Litecoin. I dabble in everything, but mostly institutional order flow. With Alpha Shark, I'm live on there. I also, you can message me on Twitter, email me, lance@alphashark.com. But, kind of my whole thing is I don't shoot for, 10, 20% on my trades. If I have 1 out of every 3 trades be profitable, that's great for me. I shoot for home runs, especially tracking the order flow. And, I've caught some big ones this year that have, made my year. And, really right now I'm not doing much, but in terms of trading, trading very light, very small, but that's what I do. If you're into trading earnings or looking for to hit that, 1,000, 2,000% trade on a far out the money call option, I'm that type of guy. That's just what I do, and I love it. I love, I treat trading almost, it's fun for me. It's something I enjoy doing, and if I have to roll the dice a little bit with proper risk versus reward, that's my style.
I think that was the key. That was the key sentence there, man. You caught it right at the end. It's risk versus reward.
Exactly.
At TGO, man, every trade we place, we never look at max potential profit first. I force people to look at least on the
max loss.
That crappy E-Trade, exactly the max loss. How can, as John will tell you, any pilot, any doctor, any attorney, they always look at how can I get my ass handed to me today, and think through that and say if that's acceptable or not, and then you could look at what the potential good outcomes are. So very well said, Lance. All right, David, now I'll turn it back over to you. Captain, you have the controls.
All right, thanks everyone. Great show, and thanks for everyone watching for sticking around for about 20 minutes of bonus information here. And be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us for both shows next week. Crowd Forecast News on Monday at 1 p.m. Eastern Time, and the next episode of Analyze Your Trade on Tuesday at 9 p.m. Eastern Time. And I just want to thank all my guests again for this week. Michael Filighera of LogicalSignals.com, Lance Ippolito of AlphaShark.com, John Thomas of MadHedgeFundTrader.com, Stephen Place of InvestingWithOptions.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, David. We'll see you next time.